Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the latest earnings report of 3 Canadian stocks that I personally own in my portfolio, including Killam Apartment REIT, Granite Industrial REIT, which are 2 real estate investment trusts or REITs, and also Brookfield Asset Management. I analyze their stocks in detail in 3 separate videos on this channel, and I will leave the link to those videos in the description box below. Currently, I own 253 shares of Killam, 60 shares of Granite, and 120 shares of Brookfield in my TFSA, and invested over $18,000 into these 3 companies. These 3 companies reported their earnings in the last 2 days. Between the 3, Granite and Brookfield reported excellent earnings with good growth numbers, profitability numbers, and nice guidance for future earnings expectations. Killam REIT earnings was not bad, but not really great, and I would consider it a mixed earnings with a few positive aspects for the business and a few negative catalysts for future of Killam. As US CPI data showed a minor dip this morning, and everybody is hopeful that inflation is finally under control and we will not see major rate hikes in the future, all the stocks and major indices are rallying today. And of course, all these 3 companies I mentioned are up huge, particularly Brookfield, which is up a whopping 8.5% today after this stellar earnings report. So in this video, I will break down the earnings of these 3 companies briefly and share with you my take on this earnings report. Let's start with Killam REIT, which is in my opinion, they reported a mixed earnings with some positive aspects and some negative aspects. On the positive side, Philip Fraser, the CEO of Killam, started this report with this sentence: "We are pleased to report positive earnings growth through the 3rd quarter, which I am going to be angry with him, as the growth numbers was really good for Killam in this quarter. Generated net operating income was up 12.6%, funds from operation or FFO per unit up 3.3%, adjusted funds from operation per unit up 3.8%, FFO payout ratio is now 65% compared to 66% in the last year, which is really good. They achieved a 5.1% increase in revenue for the same property portfolio compared to Q3 of 2021, and they generated same property net operating income growth of 5.1% in Q3. Awesome numbers in terms of the growth. I'm really happy about these numbers. However, the profitability metrics are down this quarter, and the debt load of the company is slightly up, which are 2 things that I personally don't like to see them here. The weighted average mortgage rate increased to 2.67% from 2.58%, which is due to the effect of interest rate hikes, of course. Total same property operating expenses were up 5.2% this quarter. They said the increase was driven by higher natural gas, oil, and propane prices across basically the country, which increased their utility and fuel expenses by 9.8%. And this caused their margin to diminish this quarter. They also reported a decrease in their net income, and this was due to the fair value adjustment on their investment properties. Overall, growth numbers are good for Killam, but the profitability of the business is down due to increased expenses, rate hikes, and fair value adjustments, which makes this report a mixed earnings report with slightly more negative than positive. Next, I will review Granite REIT earnings report. They reported 13% growth in their total revenue and 4% growth in their adjusted diluted funds from operation or FFO per share. They reported a reduction in their dividend payout ratio by 1%, which is really good. Their net operating income is up 11.2%, and their same property net operating income, which is an important metric for a REIT, is up 3.2%, excluding the impact of Forex, of course. They also increased the number of properties by 10 and reduced the impact of Magna as their largest tenant on the overall revenue of the company by 3%, which is a major step towards diversification from Magna. I really like to see all these positive numbers on their earnings report. They also increased their monthly dividend or distributions by 3.2% starting from January 2023, which is again great. The only thing that I didn't like in this report was an increase in debt of the company, but it's not a major concern as their debt to asset ratio is still pretty low and totally normal for a REIT. Overall, I'm happy with Granite REIT earnings report as they were able to basically continue to grow their FFO and net asset value in a conservative manner. The last company that I will cover the earnings report today is Brookfield. And their earnings numbers were really strong. their distributable earnings increased by 39% year over year, and their funds from operation or FFO was up 30% year over year. These growth numbers are not a joke, it's really strong. CFO of Brookfield, Nick Goodman, explained the growth of Brookfield in business in summary here. We delivered excellent results in the third quarter, generating $1.4 billion of cash flow. Earnings were supported by strong growth in our asset management franchise and the solid performance of our operations. As a result of the strength of our franchise, we are increasingly become the partner of choice for global corporates for deployment of capital at scale, as evidenced by recent $30 billion partnership with Intel, our $17 billion partnership with Deutsche Telekom Towers on their portfolio of 36,000 telecom towers, and our $8 billion partnership with Camco. He continued, following shareholders' approval on receiving on November 9, we plan to complete the distribution to shareholders and listing of 25% interest in our asset management business before the end of the year. So they received approval of shareholders and will initiate the spin-off of asset management business of the company. To simplify the process of a spin-off for you as an investor, if you, for example, already have basically 100 shares of BAM, after the spin-off, you will receive 100 shares of Brookfield Company with ticker symbol of BN and 25 shares of Brookfield Asset Management stock with ticker symbol BAM. They also reported that their fees revenue from their businesses are now up 18% year over year. They are in their best financial position at this point in time, in my opinion. As at September 30, 2022, we had approximately $125 billion of capital available to deploy into new investments. Total investable capital includes $36 billion of cash, financial assets and undrawn line of credits at BAM and our affiliates, as well as $88 billion of fund commitments. We have been actively buying back shares, and over the last 12 months, we have returned $1.5 billion to shareholders over that time. In addition, our balance sheet remains conservatively capitalized and we have no maturity until 2024. If we look at their balance sheet, we can see how management of Brookfield was able to generate value for investors by increasing their assets year over year with a very reasonable debt load. Overall, I'm extremely happy with Brookfield earnings report and will continue to hold my shares. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for more other Canadian companies' earnings report to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.